Local stocks dropped to a near two-year low as they joined the downturn in global stocks. The escalating trade war between the U.S. and China, as well as expectations of another U.S. interest rate hike, caused mostly foreign investors to withdraw and seek safer assets. What does this mean for investors? Let's get some answers from Land Bank market economist Guian Dumalagan. Good evening, sir.
Yes, hello, good evening. Good.
Yeah, sir, can you first tell us what is the implication of the downturn in the local stock market?
Well, of course, one of the practical implications of the downturn of the stock market is that if you're invested in stocks or if you're invested in UITFs, which are predominantly placed in stocks, then you would definitely be seeing larger declines in your portfolio. So that's the practical side of it. Now, on the implications of this particular decline, it could probably mean that moving forward, you might probably be seeing some more declines, particularly because the factors that are weighing down on the index currently today is still ongoing, and that would include bets of rising interest rates, not just here in the country, but also in the U.S. As well, and globally. And at the same time, there's also lingering fears of slowing global growth, with the IMF recently cutting their global growth forecast for 2019 to just 3.7% from their prior forecast of 3.9%. So this recent decline that we are seeing might probably perhaps last a few weeks or a few months before it could probably rebound.
But just to clarify, this is not just in the Philippines, ano?
No, this is not just in the Philippines, definitely. This particular sell-off in the local market, actually it started with a sell-off in U.S. stocks Wednesday. That's Wednesday evening Philippine time. And in the U.S., there were really fears of a growth slowdown globally because of this lingering trade tension between China and the U.S. And at the same time, there's also fears of rising interest rates impacting on growth and borrowing costs. So that has pulled U.S. stocks down Wednesday, that's Wednesday evening Philippine time, and the soured sentiment in the U.S. was carried over to the Philippines, and that resulted as well in declines in our stocks here in the country.
Okay, let me ask you na lang din yung projection mo for the peso.
Well, for the peso, it seems that towards the end of the year, we might probably be seeing the peso still remaining weak against the dollar. So currently, it's doing at 54.14 or 54.18, if I'm not mistaken. And towards the end of the year, we might probably be seeing it moving close to the 54.5 level. And this depreciation of the peso, of course, attributed to this ongoing outflows that we are seeing, especially from the stock market, as many foreign investors are repatriating their money back to the U.S. in search of higher yields. And at the same time, we might probably be seeing the peso depreciate as well, because if you look at our balance of trade, it still remains in deficit, and the amount of deficit is widening, partly because of heavy infrastructure spending in the country. Majority of those inputs in our infrastructure projects are really imported from abroad. So we might probably be seeing the peso still remaining weak from now until the end of the year, and that's on top of the interest rate hikes of the U.S. Federal Reserve. Again, we are expecting 125 basis point hike this December. And next year, there's still expectations of 3 more rate hikes by the U.S. Federal Reserve, and that should keep the dollar more appealing versus the local currency.
But Guian, briefly lang, that's in spite of yung expected natin na increase in OFW remittances usually towards the end of the year.
Correct.
Yeah.
If you look at our OFW remittances, it has actually remained relatively firm. But unfortunately, the rate of growth in our remittances has slowed down. And this slowdown actually started sometime in 2014, 2013, when there was some drop in oil prices. And ever since then, remittances hasn't recovered to its original level.
Okay.
And this remittances that we're seeing is more than offset by the outflows as a result of our trade deficit. So we won't probably be seeing some major support coming from OFW remittances.
Okay, thank you, Land Bank market economist Guian Dumalagan.